Welcome to Talk Tickers, where we break down the most important earnings calls. Today, we're diving into Sandisk's first quarter report, and wow, was it a big one for their debut as a standalone company. So, let's just start with the market's verdict, because it really tells you everything you need to know. A massive surge of over 15% the day after they reported. Clearly, Wall Street absolutely loved what they heard. So here's what we're going to cover today. First, we'll hit the headline numbers, the classic beat and raise. Then we'll dive deep into the story behind it all. After that, we'll give you our take on what's next, and we'll wrap up with a potential trade idea. All right, let's get right into it. Sandisk delivered what we call a textbook beat and raise quarter. I mean, this is the kind of report that gets the big money, the institutional investors, really excited. First up, the bottom line. Non-GAAP earnings per share came in at $1.22. Now, the consensus estimate was sitting around 88 cents, so this didn't just beat that number, it absolutely crushed it. And it wasn't just on earnings. The top line, revenue, came in over $2.3 billion. That sailed right past the high end of their own guidance. We're talking 23% year-over-year growth here, which shows some serious acceleration. But you know, the real stunner, the thing that really got everyone's attention, was the guidance. Management is pointing to a midpoint of $3.20 for Q2 non-GAAP EPS. That is not just a little bump. That implies a massive jump in profitability is coming right around the corner. So when you put it all together here, you can just see the sheer magnitude of the outperformance. This wasn't a case of squeaking by on one metric. No, this was a complete blowout across the board, and that signals some really powerful momentum in the business. So the big question is, what's driving this incredible performance? Let's get into the narrative behind these numbers, because it's a fascinating story about a company executing perfectly in a market that's taking off. If we break down their revenue, you see strength just about everywhere. Their two big growth engines, Edge and Data Center, were both up a staggering 26% from the last quarter. That's just fantastic, broad-based momentum. Okay, so here's the core narrative from management, and you really need to get this. There's a huge NAND upcycle happening right now. Basically, demand for memory chips is going through the roof and outpacing supply. And for Sandisk, this is all happening at the exact same time they're hitting their operational stride. AI is creating this massive tailwind, their new tech is ramping up. It's just the perfect storm. And you can just hear the confidence coming from the top. The CEO isn't telling people this is a one-time peak. He's framing this as the very beginning of a whole new era of earnings power for the company. He's saying, hey, we're in the right place at the right time, and this is just getting started. So, with all that as context, let's look ahead. The billion-dollar question now is, can this momentum actually continue? We actually see a pretty clear runway of potential good news ahead. Of course, the Q2 earnings report is going to be huge for confirming this margin story, but past that, we're watching for them to land another huge data center customer. And then we'll be looking for any updates on their next generation flash technology. So when you add it all up, the powerful cycle, the strong execution, and a clear path to more growth, our rating on Sandisk is outperform. We think this stock is set to deliver returns that beat the broader market. All right, and for our final segment here, let's talk about how you might think about playing this. And just a reminder, this is a high-conviction idea for you to consider, not a recommendation. Now, the question you're probably asking is, okay, the stock just popped 15%. Did I miss the move? And if not, what's the smartest way to position for more potential upside? So here's an idea, maybe a bit of an outlier, but plausible. If you're a true believer in the thesis that this is just the beginning of their earnings power, you could look into something like long-dated, out-of-the-money call options. The whole idea is to use leverage to bet on a scenario where that 2026 hyperscaler story drives earnings even higher than the market thinks is possible. Now, it's definitely a high-risk, high-reward strategy, and you've got to be really careful with your position sizing and do your own homework.
This is not financial advice.